The Federal Reserve quietly fired the first real liquidity shot of this cycle. Ripple, Mastercard revealed the next generation of global payment rails on a public stage, and XRP's ETFs are doing something that really Bitcoin and Ethereum cannot replicate. Each of these stories, bullish on its own, no doubt, but together they form a pattern, and it points in one direction. First, the Fed ending QT, and everything but name unleashing a liquidity surge that doesn't just pump markets, it supercharges the rails here, built to move that liquidity. Well, rails like XRP Ledger. Second, Ripple Mastercard laid out the blueprint for the financial system migration, stablecoins, institutional settlements, and XRP is a transmission layer banks can't ignore anymore. And lastly, Bitcoin, Ethereum, they're bleeding red. XRP ETFs are attracting relentless inflows, 13 straight days in the green. You don't think that means something? You worried about the price? That's all you're looking at? You better open your eyes because it's a big deal. We're getting close here. Now, this first story, the Fed just ended QT, and it's massive for XRP. It's massive for altcoins. We've been waiting for alt season. I think this is a moment we've been looking for. The U.S. Fed quickly injected $13.5 billion into the banking system. That's the reality. You hear from Jerome Powell, well, we don't know if we're going to cut rates. We don't know if, we're going to be injecting money into the system. You see what they're doing here. $13.5 billion, the second largest liquidity pump since COVID. And everyone's calling it bullish for Bitcoin, and it is. But they're missing the real story here. The Fed, when it expands liquidity, Bitcoin, of course, rallies. When the world needs to move that liquidity, XRP rallies, and that's where we are. This is the first cycle where XRP is fully integrated and cleared by the United States. XRPL, AMMs, DEX volume, and stablecoins, they're coming online and they're growing exponentially. Institutions can actually use the rails built over the last decade for real liquidity right now, for real utility. That's the difference here. Bitcoin reacts to liquidity. XRP transmits that liquidity. This is our moment here. And it's always going to be like that. This is what you're looking at for when altcoins really light up and start to perform. And we thought it would happen earlier, and it should have happened earlier. The Fed has been in this little struggle bus with the president all throughout the year, but they've run the course. It cannot continue. They are going to have to not only drop rates, but open up their balance sheet, or things are going to crater. They got to do it. Beyond that, at the top of the Fed, you have Jerome Powell. He's not here for only a few more months, and you know the replacement, what he's going to do. Whether that's good or not, we'll see. But for crypto and specifically altcoins, man, it is going to set this whole space on fire. Don't blink. It's just a matter of time here. Ripple and Mastercard, they just drew up the blueprint for the future of payments. At Binance Blockchain Week, Ripple's Reese Merrick sat on stage with Mastercard to talk about the next evolution of global payment rails here. And the message, it's unmistakable. Stablecoins, XRP, real institutional settlements, that's the standard. That's the standard for the future. Mastercard's SVP said mobile payments, they're new 10 years ago. Today, they're default. And he believes digital assets are next. That's the next evolution of this technology, the future of finance, borrowable, spendable, and world-changing. That's what cryptocurrencies do. Ripple echoed the same idea here. Banks now must have a digital asset strategy. You cannot be anti-crypto any longer. You must adopt. You cannot stop progress. Stablecoin adoption, it's accelerating. XRP and RLUSD are positioned to move real value across the XRP ledger. And don't forget, Ripple, MasterCard, WebBank, and Gemini, they're already testing RLUSD for blockchain-based settlement. And all that liquidity flowing on the ledger, it's just going to make XRP more usable, more valuable, more liquid. That's the key here. This isn't theory. This is the financial system beginning to migrate. That change we have been waiting for is happening in real time. Now, XRP ETFs, they're doing what really Bitcoin and Ethereum can't right now. This is amazing. The streak continues, 13 straight days of green inflows across U.S. spot XRP ETFs, totaling 874 million since launch. Canary, Bitwise, Grayscale, Franklin Templeton, and soon 21 shares. Every single day since November 13th, money has come in, not out. The big money knows what's up here. Meanwhile, Bitcoin ETFs, they're red. Ethereum ETFs, they're red. XRP's price, it's flat, but that's not what to focus on here. XRP is the only major asset. where ETF demand is surging, but the price hasn't moved yet. That's not a weakness. That's a coiling spring here. And if the inflows keep up at this pace, XRP will become the first asset where institutional accumulation leads price, not follows it here. The smart money is positioning early. They're getting in while everyone else is scared. 900 million has already voted, and it's only going to continue from here. This is as bullish as it gets. Now, the CFTC, they call it a new golden age for innovation in America. For the first time ever, the U.S. has a regulator-approved spot crypto trading platform. This is the one thing, though. It still bothers me. The CFTC, they're, of course, friendlier than Gary Gensler was, and the current SEC is as well. But in my opinion, it's not any of the SEC's business or the CFTC's business. If I sell oil to someone, I don't have to register with anybody. Crypto should be no different. It's a pure commodity, unless it's like a, wrap security or something else. Your general cryptocurrencies, XRP, Bitcoin, Ethereum, that's none of the CFTC's business or the SEC's business. It's kind of like they beat you down and finally you're like, all right, we'll give you a little bit here. That's what I see happening here. But Bitnomial just became the first exchange to list CFTC regulated spot products, marking a historic pivot in U.S. policy here. The follows a coordinated push by the Trump administration, CFTC's crypto sprint. They are sprinting to push this technology to full adoption here. Joint SEC CFTC guidance allowing spot commodity crypto trading. Full all-of-government plan to reclaim U.S. leadership in digital assets here. Bitnomial, they say it plainly, we're bringing leveraged spot crypto back to the United States. Not something that I use, but it's part of general, any major asset class has that, and we need it. Okay. Regulated, greenlit onshores. This is the moment the U.S. stops watching crypto innovation happen elsewhere overseas and starts competing again. All right. Next one here. Tokenization is exploding, and I've been yelling at the top of my lungs about this. But Wall Street and crypto, they're not in agreement here. Who controls these rails? How should it look? At today's SEC Investor Advisory Committee meeting, Citadel. We all know Citadel. Not the best actor in this industry. Coinbase, Galaxy, and BlackRock, they sat down to discuss tokenization. What emerged was a philosophical divide here. TradFi, and really when we say TradFi, we're talking about Citadel, they want tight controls, right? Crypto wants decentralized rails. Citadel, they're urging the SEC to crack down on DeFi for tokenized securities, even treating decentralized protocols like broker-dealers. Because listen, if it's on decentralized systems, they can't game the system, right? They can't slant it to their advantage. Citadel wants that. They don't want open and free systems that are fair for everyone, right? But that's the future. Crypto leaders push back, saying you can't regulate a DEX like a broker. What the heck is this? You can't force control over assets that no one currently holds, and you break the very thing that makes DeFi safer. This fact that it is decentralized and on the open market. BlackRock acknowledges the obvious. There isn't one path forward. There's not one way to do this, right? Both systems, centralized systems, decentralized exchanges, they both have their own, advantages and reasons to use them, and they will both propagate throughout the world of trading here. The fight is no longer if tokenization happens. It's who controls it, Wall Street or open protocols? And again, you can't stop progress. We'll eventually get to the point where we have fully DeFi systems and, hopefully we don't take a step back and listen to the citadels of this world. That's going to be a big problem here. Retirees. So we have all these people that traditionally they don't invest in cryptocurrencies, but that's changing. They're quietly becoming one of crypto's fastest growing demographics. Coinbase chief security officer says the shift is real. Crypto should be part of a diversified portfolio for retirees, and it's something they need to learn. And why there's been this change? Why are they starting to invest in this asset class? Well, BlackRock, Bank of America, wealth advisors, managers now openly endorsing small crypto allocations. So, a few percent here of your portfolio, which should probably be appropriate for most people. They're not deacons like us. Spot ETFs make exposure simple, regulated, and familiar. It's the regular products they always invest in. Real-world adoption, payments, remittances, tokenizations is impossible to ignore. So you need to have some kind of foundation behind this. It has to have utility. It has to have a purpose, and we're seeing that happen, and that's going to build a lot of value. BlackRock's transparency beats traditional cash movements. The stigma is fading. For the longest time, your older generation, they're like, oh, that's some criminal stuff. Not anymore. They're understanding the value of this technology. When retirees start treating crypto like standard asset classes, mainstream adoption has happened. That's what we're seeing here. Lastly, Bank of America, they're now telling their wealth advisors it's okay to put people in crypto products starting January 5th, I believe, January 2nd. And this is the second biggest bank in America here. Allocations 1 to 4%. Again, big money. Previously did not invest in crypto. Now they can. Let me know what you think down below. As always, please like, please subscribe. The revolution will be televised right here on Jungle Link.